When was the last time you visited your hometown or your village and you came across your former teacher and maybe ukamuuliza, mwalimu, what are you up to? And their response is something like, mimi tunakula pension yangu. That is the product that we'll be discussing today. This is a product in insurance that we call an annuity, where retirees are able to be guaranteed a lifetime of income. Welcome to today's episode. My name is Mama Bima Kenya. I'm a licensed insurance agent in the 254 and a passionate insurance educator. So karibuni sana. Over the next few minutes, there's just so much that we'll get to learn. And today I'm really loving my tea. As you can see, pension plan yako haiwezi kuwa watoto wako. It's my hope that we are the generation, we are that generation that is working hard towards their retirement goals, right? Because most of us actually are our parents' retirement plans, and for sure it's quite that burden. Some of us, of course, have taken up that role with a lot of pride, because anyway, our parents just gave their all in bringing us up, in giving us the opportunities that were accorded to us that they actually never had. But you see, where we are in this new era, with all the opportunities that, and also all the knowledge that we have, we can definitely plan properly when it comes to planning for our retirement. Now, to the topic of the day, annuities. That product that retirees refer to as pension. That is what I really want us to discuss. And I want us to discuss it from a point of the last annuity client that I got. This was a gentleman who reached out, had done an early retirement at the age of 50. His pension benefit was approximately 3.5999 million shillings. Okay, so 3,599,000 shillings thereabout. And when he reached out, he told me, what, Mama Bima, I love that you work for different insurance companies. Please go into the market. I already have a quote from company X. Let's call them company X. But I also want to see what else is in the market, just to compare with the quotes that he had already gotten. I do have 4 companies, by the way, that I swear by when it comes to annuity business. So immediately I got that pension statement that the client had sent me and sent out, to my different contacts in the annuity desks of the 4 different companies. And of course the quotes now came in. If you are planning for your retirement, or if you're helping either an elder sibling or your parent as they are transitioning into retirement, I feel that is where you need to start. When it comes to seeking out an annuity product, okay, you need to start by also getting into the market and realizing exactly what is there, who will give me the best option out of the pension benefit that I have. I just realized that I've not yet described what this annuity is. I gave you a story, but an annuity is basically a contract between you as the retiree, or the person that now we call an annuitant. It's a contract between you, the annuitant, with an insurance company, where you come to them and tell them, hey, I have 3,599,000 that I have been saving and investing over the course of my employment through a pension plan, and I want to now give you this 3.599 million shillings, and you guarantee me a monthly income or a quarterly income, depending on how often you want to receive this. Some people opt for either monthly, others for quarterly, others for semi-annually, others just want a lump sum every year, okay? So you tell them, and maybe I want you to guarantee me a monthly income every single month, say on the 25th, for the rest of my life. And that's why I keep saying an annuity is probably the best guarantee or the best sort of like shield against old age poverty. Because, for example, in the case of my client who purchased this annuity with his 3.599 million shillings, he is assured he's retired at 50. That's a very early retirement. If this gentleman even lives for another lifetime, even if he lives up to the age of 100 years, insurance company that he bought his annuity with will pay him a monthly income for the rest of his life. So he crosses 60, bado mshahara inaingia, crosses 70 every month, in his 80s, in his 90s. An annuity is that guarantee of come rain, come sunshine. It's not dependent on market forces. You will be receiving X amount of money on this given day every single month. Going back to my story on my client, I sent out my request for quotes from the 4 different annuity providers, and now the quotes came back. And the reason for this, of course, even just top of head, because this is something I do regularly, and I can always tell like where their rates or the calculators that they're using, where they are, and how the different companies in Apimana and Nguvu, I could already tell which company would have the best rate and the best like monthly income. So they came in. Of course, it was that particular company that I expected to have a slightly higher monthly sort of like salary, let's call it that. I must tell you, so when it comes to annuities, they give you different options. For example, in annuities, we have what we call guarantee periods. Okay, so this is where you're given like how many? 4 different options. Like you can take, say, a 0-year guarantee, or a 5-year guarantee, 10-year guarantee, a 15-year guarantee, or a 20-year guarantee. And basically this means, okay, because remember, when you now exchange your pension benefits and now sort of like bequeath them to the insurance company, and in return the insurance company promises you an income every month, what that means is a particular time, like when you finally now transition, when you finally pass away, then the insurance company will really not have anything, like your deni yenu imeisha. Okay, but then now the guarantees bring in something different to the annuity. For example, a 0-year guarantee, you're basically saying, no, just calculate for me. I want the highest possible monthly income that I can receive. But then now the danger with that is, say you buy that annuity, say at the age of 55, God forbid, 2 years down the line, you pass away. Okay, so you are getting your monthly income for 2 years, but then after that, if you're on a 0-year guarantee, ukienda ata insurance tu inasema, okay, pole but kwaheri. Like there's nothing that would be paid out even to your beneficiaries. I think in my entire career that spans 5 years now in the business, I have only done one, retiree client who really demanded on going with a 0-year guarantee. I remember he was like, no, Charlene, he pension ni yangu. Like I have started my kids, my beneficiaries, like I want the maximum possible monthly income. And of course, you see, as insurance agents, we are there to educate, to guide our clients. But at the end of the day, client ndiye msema kweli. It is the client who decides, no, you have educated me, I've understood all my options, but you know what? This is what I want to go with. But in my career, only one client really insisted on having a 0-year guarantee. I'm actually one of those people who really play safe. Mimi what tunasema, let's go with the maximum guarantee. So 20-year guarantee is always my sort of like my recommendation for clients, and I'll tell you why. So you retire at 50 and you take up what you call a 20-year guarantee. It means, God forbid, you start receiving your annuity payouts, like your annuity goes into contract, and 5 years into the plan, unfortunately, you as the annuitant or the policy holder, you pass away. Okay, so that annuity still has some 15 years to go. True or false? Okay, so remember, it was a 20-year guarantee. You've only been on that annuity contract for 5 years. as the annuitant, you have passed away. So what the insurance company does, they go recalculate. Let's say they were paying you 200,000 shillings per month. So they ask themselves, how much is that in a year? So that becomes like 2.4 million. Then they're like, we still had 15 years to go in this contract. So they do the 2.4 times 15 and they pay that as a lump sum out to your loved ones. So that's what, if death of an annuitant happens within the guarantee period, then the insurance company will look at how much money were we still going to pay within that time frame, and then they just lump it up and pay it out to the beneficiaries. But now, if death happens outside the guarantee period, saying you took up the annuity when you were 50, you pass away when you're 75, so even the guarantee period, Elisha, 5 years ago, you get. At that point, when the annuitant finally transitions, there's nothing now left to be paid out to beneficiaries and all. And this sometimes I get a few people, especially younger clients, when we are discussing, say, between annuities and another product called an income drawdown. That is a topic for another episode. And I get young people just telling me, Charlene, you mean that, if I go, that my loved ones will not get anything? By the way, when it comes to your pension, guys, we need to do proper retirement planning so that our pension is also not what you are eyeing to be sort of like an inheritance for your kids. But the pension is for us to eat. Like, it's for us, for our golden years. You get. So sometimes you feel that hesitation where people are like, yes, I really want to max out on how much the income that I can get from this annuity product. But at the same time, I think I want also this sort of like lump sum money. Like, you are really torn apart because you still want that lump sum, you want that benefit, that pension benefit to also be sort of like part of your estate, so that it can also form part of the inheritance for your kids. And I think when you get to such discussions, it really speaks of probably your retirement planning not being as comprehensive. Like, let's say you have a proper whole life insurance and investments that you are doing and all these other things that you are doing, and how those can actually go, say, into inheritance planning and form part of your estate, then pension can be yours. You can go into the market free and say, you know what, these 20 million shillings that I accumulated in my pension plan during my work years, this is for me. I want to max out on how much income I can get every single month for my living expenses, so that I can live, that ideal retirement lifestyle that I have in my mind, okay? So now, going back to the annuity. So we talked about the guarantee periods and how they differ. So in this case, my client actually went with a 20-year guarantee. Yay! Honestly, and I'll tell you, I play it safe. I am an insurance agent, and even when I'm advising, I try to ensure that, one, we actually sort of like max out on the benefits that we can get. So I am really pro a 20-year guarantee period when it comes to annuities. Now, the next hurdle that we spoke about with the client, because now when we looked at the 4 different quotes we had gotten, of course, there was now one that was like 1,000 bob or 2,000 bob higher every single month over the other quotes that had come in. And then at that point, so we were still having a back and forth with the client, but then we never met. And I think that's the beauty of social media and just the world going really digital nowadays. You're just able to do these things on WhatsApp. Like, literally, my conversation with this client was not even on Google Meet. It was WhatsApp and phone calls. And Anitumia, like statement, I get the quotes, I send them on email, but he was still insisting, send me on WhatsApp for easy, like quick back and forth. So when he finally got that quote, I also just prodded him. So do you have a spouse? Would you want to add them to your annuity? Guys, you can add your spouse to your annuity and actually buy what we call a joint annuity. So both of you become joint annuitants. Let me tell you the beauty of this. When you get a joint annuity, your spouse doesn't need to have had a pension. At a kama, they never saved in a pension a day in their life. You can literally add them to your annuity. And what this means is, hata ukienda before them, they will still continue receiving a monthly income from the insurance company. By the way, let me tell you, every time I see clients pass on this, option, my heart breaks. Let me tell you, sometimes it's so hard to remove that human side of you. Like, you're always like, please, the reason that these insurance products exist, guys, is to help us fight against old age poverty. I really loved this gentleman. Remember, he's 50, his spouse is 49. He added her onto his annuity. And let me tell you the difference. The difference between what he was going to receive if he was just to stay on a single life annuity, yake peke yake, the difference between what he was going to be getting on a monthly basis versus what now he will be getting now that it's a joint annuity was only 1,190 shillings. Before, he was to get like 38,118 shillings, and eventually he went to the joint annuity with a 20-year guarantee period with a monthly pay of 36,928 shillings. Hapo ndipo huwa nasema, Mama Bima, hapa umeivisha deal. I was so happy. But then let me tell you, I get so happy. Like, these are such wins for me. Like, those moments you sit down and you're like, Shiko, today you did a very good job. And I really love to see, spouses who care about each other, who love each other, who, when they hear, this was a whole new concept for him. He didn't even know like a joint annuity that you can add your spouse to your pension. He didn't know that. But when he saw that opportunity, he's like, for only a difference of 1,190, and you mean that, God forbid, hata ningeenda 20 years down the line, and my spouse lives still for another 20 beyond the time I have got, you mean she will still be receiving like the 36K I signed up for from day one? Imagine the beauty of that. I know the topic of annuities is broad, and we will do more and more things on this. I just wanted, for this video, I think it was more of a celebration of this gentleman. Just a fantastic, a fantastic man who, I was very proud of him that he had embraced pension in his working years, and he had this lump sum. And at this point where he's doing an early retirement, but still continuing in business, but he felt that, for this pension, I just want now to lock it in an instrument that can now be giving me a monthly income. And he even made this deal even sweeter and sweeter by adding his amazing wife into this plan, so as to ensure that even 40 years down the line, 30 years down the line, this family will still have an income being paid into their bank account every single month by an insurance company. I mean, I would be so keen to hear, what questions do you have around annuities? There's just so much that we can discuss, and maybe I will do more videos on this. I will bring other just episodes on this, just to even discuss like the different types of annuities, what we call like a 50% reversionary, or 100% reversionary. What I loved about, by the way, this gentleman, he went for what we call 100% reversionary. He saw the option between, in case atangulie, his spouse, then she would be receiving like 50% of what he was receiving when he was alive. And he was like, you know what? Nope. I would want my wife to receive 100%, just what I am receiving in my lifetime. I mean, in this business, my business is a very beautiful business. For me, that is just love in action, like true love in action. So that's it for today's episode. Thank you so much for your time. I do hope you enjoyed these stories of mine, because I honestly do enjoy also sharing them with you. It's always lovely hanging out with you. My name is Mama Bima Kenya. I'm a licensed insurance agent in the 254 and a passionate insurance educator. You know how to get me, whether it's through my socials, whether it's through my WhatsApp number that's displayed below, +254 739 040 400, or you can also send me an email, mamabima@places.co.ke. Thank you so much for your time, and until next time, start planning for your retirement. Stay insured, and remember the message of the day: pension plan yako haiwezi kuwa watoto wako, so tujipange.